Alrighty, good morning, everyone, and good morning. Hope you guys are doing well. Today is Tuesday, January the 20th. Decent amount of things coming into today. Lots of news that we had over the weekend. Trump tariffs probably potentially back on. We'll see what happens here with the overall markets, but gapping down here about 2% on the major indices. So pretty big gap down here, actually about 1.7% on the NASDAQ, about 1.3% here on the ES. We'll kind of talk about exactly what we're looking for coming into market open, but a lot of names gapping down, SMH gapping down here. So really broader market. Really taking a tumble here in the morning. We'll see if we look to buy the dip coming into market open here today. But before we do that, what is up, everyone? Good morning. Hope you guys are doing well. Hope you guys enjoyed the holiday that we had yesterday as well. What's up, everyone? Good morning. Good morning, B Roots. Good morning, Cody. Non-Tolly, ANL. Good morning, Robert, KO. Maria, Victor, Lamont, I am 50, Martin. Good morning, Under, Chris, Ryan, Cinna. Good morning, Big, Gerald, Greg, Cosmic, Cuba, Stefan, TW. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. Let's hop right into exactly what we're looking for coming into this week. First things first, let's talk about the economic calendar. So, economic calendar here. We do have the World Economic Forum happening all week. So that is something to keep in mind. So as you can see, the World Economic Forum is going to be basically all week. President Trump is going to be speaking tomorrow. That is going to be at 8:30 a.m. Eastern Standard Time. On Thursday, we have Core PC with final GDP. We also have unemployment here as well at 8:30. And then on Friday, similar thing. Basically the events happening all week. Plus, we have some flash manufacturing PMI. Plus the flash services, and then we have revised consumer sentiment, which is fairly important here as well. So basically a lot of red folder news with this gap down here in the overall market. We do have to be a little bit cautious. If you guys do remember the Trump tariff. We've had it a couple times last year, but whenever the tariffs come into the market, there is a decent amount of volatility just because there's a lot more uncertainty in the markets. Usually there's not really a clear direction. Okay, we should be good back on. For some reason, my stream cut out once again, but I should be good. Can you guys hear me? Just making sure everything's good. I'm not sure how many guys were here from last year, but I remember when I had the Starlink, it would cut off so much because it was so cold outside. Right now in Canada, it's like ridiculous. It's like negative, I don't know, it's like negative 15, 20-ish outside, so it's absolutely freezing. You need better. Yeah, I don't know if it's the internet. Now I have fiber optic. It's something that just cuts out. Maybe it might be OBS or I don't know what it is actually. But I mean, I have the best internet, but I don't know why that works. But yeah, let's see. It's good. You need better internet. Yeah, I don't know. All right. Let's keep an eye out on, let's take a look at the earnings calendar. So we have a decent amount of things here now. Yeah, if it's fine, it should be good. If it's not, you can always refresh the stream. As for the earnings calendar coming into this week, so we have a couple of earnings to keep an eye out for. Number one, Netflix. To kind of kick off this earnings season, that's going to be today after close. Couple other ones, keep an eye out for IBKR, right? You have a bunch of banks happening here as well. And then we have Intel. So we have Intel on Thursday after close. That's something I'm going to be keeping an eye out for as well. But really nice push up on Intel to kind of give us a little bit of information on the semiconductors. So that is going to be Thursday after close. So we have Netflix, and then we have Intel, a couple of the bigger ones. Of course, there's some other names, so you can keep an eye out on that as well. Now let's head on to some of the names that we have coming into today. First, let's talk about the ES. So As you can see right here, we're on the ES here, futures on the daily chart. Key level that we have marked out is our previous all-time highs. So as you can see right here, for the overall markets, we kind of have this trend line drawn out. We have this previous all-time highs. You can see what's currently happening. We weren't able to break above this key pivot level. You can see this kind of rejection, and we're now breaking underneath this trend line. You can see one touch, two touch, three touch, and now break underneath here with new. So we're having a little bit of a pullback. Sorry. My cursor was in the way, but you can see multiple touches here. Break of this trend line, was not able to get back above this previous all-time highs, and now we're having that push right back down in towards key levels, which is this 68.77. So overall markets kind of breaking this trend line, a little bit of pullback plus bearish news catalyst. So that's kind of what's driving the market a little bit lower. Also kind of lines up with technicals. But as you can see, that's what we have for the ES. Now, if we go into the lower time frames, so if we go into the hourly chart, you can see we end up having this nice gap down. As you can see, coming into this week in the overnight session. And now you can see we end up having this super strong push towards the downside, higher time frame key pivot level, which is your 68.70. And we end up gravitating down there really overnight. And now you can see in the pre-market, a little bit of buyers are stepping in. So moving forward, what's the game plan coming into today? As you can see, we have a pretty big gap down in the markets, down about 1.42%. The key levels that we're going to keep an eye on today is going to be this level, which is your higher time frame level of support, your 68.70s. A lot of times when we do have these gap downs on Monday, let's say over the weekend, you're either going to be really aggressive towards the downside right off the bat, right, looking for that first pop to get shorted, or you're going to be a little bit more hands off because there's going to be a lot of volatility right off the bat. So you're either going to be looking for that short within the first 5 to 10 minutes to try and trade this down in towards our pre-market lows, or you're going to be a little bit more hands off and wait for that first kind of 30 minutes to digest in the market, because as I mentioned, there is going to be a decent amount of volatility. A lot of times after these big gap downs, right, you can see huge imbalances in the markets. There's going to be quite a bit of volatility. People are going to be looking to manage their positions over the weekend. So the bunch of things that happen. So you want to be a little bit more cautious right off the bat, or you're going to be looking for that right pop and fade. So key levels that we have today, let me actually just kind of refine my levels here now. So I'm going to refine this here on the 15-minute time frame. The next level I'm going to have marked out here as well now is just going to be this pre-market low that we kind of created here. This was on Monday, and you can see order block here as well. So I have two key levels coming to market open. I have this 68.80s, which is a pretty big level. I'm actually just going to refine it to this here on the 15-minute time frame, and also have your higher time frame level of support. So coming into today on the ES, for upside, it's going to be a little bit more difficult. We could look for that kind of V-shaped recovery here, either off your pre-market low, or it's going to be above your 68.80s, sorry, your 68.70s for this continuation higher. So this is a number one possible long scenario right off the bat, right? Wait for the buyers to step in, look for the higher low for continuation higher. Another possible scenario here, reclaim right off the bat, you can be looking for longs above your 68.88 for continuation higher. I think longs, we want to just wait for that first kind of 5 to 15 minutes to play out, right? That's going to give us kind of a good indication of where the market wants to head, at least for the first 2 hours of market open. If we have a lot of buyers that step in right off the bat, we can be looking for a potential mean reversion for that continuation back towards the upside. So let's just wait for that first kind of 5 to 15 minutes to play out after having news over the weekend. If we do want to look for some downside coming into market open, it's going to be off your basically these pre-market lows here. Also, this 15-minute order block, you're going to be either looking for that pop and fade right off the bat off this 68.80 for continuation lower, or now we're going to be looking for shorts underneath that 68.68 for that continuation down in towards that pre-market low. So these are the two scenarios for the downside coming to market open. As I mentioned, we have two scenarios for the upside. Really now with the market tariffs potentially coming back into the market, just be open and playing both sides, right? Don't have a bias to one way. Whenever we do have these Trump tariffs, a lot of times there's going to be volatility both ways. So you just want to have no bias coming to market open, be open and playing both sides. That's why we have both these two scenarios played out, and we're just going to wait for the reaction that we have off key levels. So you're going to be trading based off of the reaction off key levels until we have more information, which either means, right, we have some other news event that's going to affect the market, or, right, something develops on the higher time frames. But this is what we have coming into market open. Now let's go on to the SPY chart. As for the SPY chart, let's go on to the daily time frame first. As you can see here for the SPY, similar kind of thesis here. What we have was this previous all-time highs. You can see we had multiple touches, nice break and retest here on the higher time frames, but now ultimately breaking underneath. And now we're gravitating down in towards the next key level, which is your 680. As you can see, this is a higher low spot, right? SPY was also in a very key inflection point here as well. You could have drew out this higher time frame wedge pattern. What we had was multiple touches. We actually had 5 touches here, and then we had some touches towards the upside. So for the SPY, a little bit of a break now with news, and now we're pushing down in towards this 680. So let's go back onto the 1 hour time frame. A little bit less information here, but key levels coming to today here for the SPY. Once it broke underneath this 686, next level was this higher time frame key level of support. So let's go on to the 15-minute time frame. As you can see, as I mentioned, not really too much information. We just have this big wick at 4 a.m. and now we're having a little bit of a bounce off this 680. So for the SPY coming to market open, you're really going to have to use the futures charts just because there's a lot more information here. For the SPY and Qs chart, there's not really too much that you can see. So I'd much rather use, as I mentioned, the futures in this case. This is why you want to mark up both, just because you're having a little bit more information. So for the SPY coming to market open with this pretty big gap down here, key levels that I have is just going to be this 680. So if we want to see some upside, really bounce off your 680 for this continuation higher, or now it's going to be above your pre-market high for this potential continuation back up and towards your 680, 650. So as you can see, we have a pretty big gap here. As I mentioned, down about negative 1.42%. I don't expect this gap to fill within 1 day. So this is a very big gap here. I would be very surprised if we fill this back in 1 day, but we can fill like half the gap, which is your 680, 650, which is also a higher time, basically your last week's lows here as well. So as I mentioned, if you are looking for a mean reversion, don't expect that full gap to fill, but we can be looking for your last week's lows, which is about half the gap here if we do want to see a pushback towards the upside. So this is what we have for the SPY chart. As for some other key levels here on the SPY, I'm going to have to mark out potentially your pre-market high, but as I talked about, I'm going to base it off of the ES here. So I can mark out now, it's going to be your pre-market highs here as well, which is your 682.50. I'm kind of just basing it off of the ES chart here. So keep this in mind coming to market open. Now let's go on to the NQ chart. All right, we are on the NQ daily time frame, and now we're pushing a little bit lower here with the ES. As you can see, multiple touches. We have 1 touch, 2 touch, 3 touch, multiple touches on the NQ. And as you can see, we're just kind of consolidating inside of this range for a bit. So as you can see here for the NQ, the better part of the last month or so, we're just kind of consolidating inside of this range. Now you can see we're finally breaking underneath this trend line, and we're now gravitating lower, of course, with news here as well, along with the overall indices. So for the NQ, we ended up gapping down here, and now we're gravitating down in towards this higher time frame pivot point. So for the NQ coming to market open, you can see this is a very key level support. You can basically just drag this over, and this is going to be your key level moving forward, 25,275. If you want to refine the level even more, you can just kind of mark it down into this wick. And as you can see right here, it's going to be that 25,280 essentially. So coming into market open here for NQ. Moving forward, if we actually just go into the hourly chart, you can see if we want to see some more upside, the reclaim back above this 25,280 is going to be key. Back above this, create higher lows for potential mean reversion. If we want to stay heavy, which now we're underneath this key level of support. You can see touch here, touch here. If we break underneath, which we already have, now we're coming back for the retest. If we can stay heavy, coming into market open, we can be looking for this next leg towards the downside. If we reclaim, potential mean reversion and maybe this inverse head and shoulders can form. But this is going to be the key level coming to today, 25,280. So keep that in mind for the NQ. So game plan, potential pop and fade coming to market open. And we could be looking for continuation back down in towards the low that we've created here in the overnight session. If we reclaim back above, then we can be looking for longs for a potential push back up and towards our last week's lows, 25,440. So this is what we have for the NQ coming to market open here now. Let's go on to the QQQ. So for the QQQ higher time frames, let's go on to the daily chart. Fairly similar thesis. Key level that we had marked out was at 628. We were waiting for that break above your 628, but you can see multiple touches towards the upside. And now you can see kind of breaking underneath this lower this lower trend line. And we're continuing lower. So let's go back onto the 1 hour time frame. The key level that we have marked out is that 610. So that 610 here is going to be key. Let's actually just mark this out here now. Drag this over. It is going to be that 610.74. So for the QQQ coming into today, I have your last week's lows marked out and also have your 610 here on the higher time frames. So coming to market open with this big gap down, if you do want to see some more downside here, pop and fade is in play off that 610 for this push down in towards our pre-market lows. So this is really the only short scenario that I have coming to market open. It's going to be off your 610 here. Another possible scenario, if it pops higher, of course, or it gets back underneath that 610 maybe later into the session, we can be looking for continuation lower. But I really only like that short right off the bat if we get aggressive sellers instead of shorts much later into the day. But that's what we have for the QQQ. For downside, if we do want to see some upside, there's really only one scenario. Reclaim back above your 610, buyers step in right off the bat, or right, we can see some buyers potentially step in here off your pre-market lows, 607, or you're looking for the reclaim maybe later into the day back above that 610.67. So this is these are the two scenarios that I have for the Qs coming into market open here now. And on the ES, there's actually a lot to go over. We still have to go over the YM. We also have to go over SMH and IWM here as well. But if you guys do have any tickers, I'm not sure how much time we'll have coming into today, but you guys can now drop them in the chat. If you guys do have any tickers or any charts you'd like me to go over, you guys can drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, I'll answer some questions as I go over the SMH here. Intel back at Friday's close. MU only moved down. Yeah, Intel is basically MU's at all-time highs. We'll kind of talk about Intel here. What type of options contracts? Yeah, weekly out the monies. What out the monies? Oh, also another big news event that we have as well for people that do trade options. We are going to have now more expirations on some of the Mag 7 names. So that's kind of exciting. Just more volatility in the markets, but for names on Tesla, let's see if I can pull this up. Actually, I'll potentially pull it up tomorrow, but for anyone that does trade options, some of the Mag 7 names, we're now going to have Wednesday expirations. So instead of Friday's expirations only, we're going to have more expirations during the week. So that's something to keep in mind. What else? Let me answer some questions here. It's me again, I'm not going to spam. Okay, main watch. Yeah, I'll go over the main watches here in a bit. But as for the SMH, as you can see here, higher time frame, still very bullish, right? Key levels well above our previous all-time highs. Nice trend towards the upside. A little bit of a pullback here. We do have a gap fill on SMH, so now we just like to see this gap fill hold for the continuation higher. Let's go back onto the lower time frames here. So as for SMH, the key levels that we have marked out is really your Wednesday's highs, which is that full gap fill. You can see a little bit of buyers kind of stepping in here right off that gap fill. Now the key levels that we have here is your 396 as well. So for the SMH, you can see kind of buyers stepping in off this full gap fill. Really right off the bat, either that reclaim back above Our 396 here is in play for continuation on the semis for a push back up and towards that previous day close. Another possible scenario here is the drop right off the bat, and you could be looking for higher lows off your 389. Another possible scenario, we just kind of consolidate all day. You want to be a little bit more cautious, which is more likely here on the SMH. But where I want to be looking for opportunities, 389, or now it's going to be above your 396 here. So this is the semiconductor ETF. As for some downside, potential kind of pop and fade is in play off your 396. Really only area I'm interested in for some shorts here on the semis. I definitely don't really want to be shorting underneath your 389 after this pretty big gap down coming to market open. So potential pop and fade is in play here, or some sort of opening drive play for this continuation down in towards that 389 on the SMH. So this is what we have coming into market open here today. As for the IWM, higher time frame still very much intact, as you can see here as well. Higher lows are being built on the daily time frame. A little bit of pullback here. Even could pull back down in towards that 258 for continuation higher. But let's go back onto the lower time frames. So coming to market open here today, key level 262.50s. So this is the key level here, and then I also can mark out that 260 here now. Let's just mark out this, drag it over. So we have 262.50, and we also have your 260.50. So we can drag this over here on the IWM. If you do want to see some upside here, reclaim back above that 262.50 for continuation, or the potential bounce play off that 260.50 is in play here for the IWM. So two scenarios here. If we do want to see some downside, potential pop and fade for continuation lower, or now you could be looking for the break underneath 260.50 here on the IWM. I would be a little bit more cautious, but that is something you can keep an eye out for. But pop and fade are now underneath that 260.50. So this is what we have for the major indices coming into market open. Now let's go on to some tech names. Still a bunch of names I have to go over. So I'll head on to some tech names here as well, and then head on to some other names in a bit. Do you prefer trading stocks on the day of its earnings? No. If you trade on the day of its earnings, the IV is going to be fairly high unless you're trading for earnings, right? The trading the day of earnings is the same thing as trading a news event. Let's say trading FOMC, right? The implied volatility is going to be high. So any moves that you don't have, like big moves in the markets, you're going to lose a lot of money. But something to keep in mind here is the VIX, right? Nice spike up in towards 20. So we always talk about this. If the VIX is above 20, really good for intraday volatility. So right now you can see the VIX is basically right at 20. So this is really good for day trading. So sorry. So if it's above 20, it's really good for intraday trading. We're going to have a lot of opportunity just because, right, whenever the VIX spikes, it's basically our greed and fear index. So a lot of volatility expected to come into the markets with this gap up. Whenever it's lower than 20, right, it's better for swing trades plus long term. Whenever it's greater than 20, of course, it's going to be better for day trading. Of course, swing trading plus long terms are going to take a hit. But it's really good for intraday opportunities. So that's something to keep in mind here. Now the VIX is spiking at 20. I do expect a lot of nice opportunities here coming into the rest of the month. All right, let's go on to the Tesla chart. So as you can see here for Tesla, this one continued to show weakness, plus you're now having this gap down as well. So we're going to break underneath a key level of support here, which is that 430. With this gap down here as well. So for Tesla, gapping down underneath their last week's lows, coming into a key level of support here, 430 on the higher time frames. If we maintain underneath 430, I do expect continuation lower. Reclaim, we can see your last week's lows. Let's go into the 1 hour chart. 1 hour chart. What we have here is going to be that 430. As I mentioned, the reclaim is above your 430s in play for continuation higher. Really only long scenario is going to be above your 430. Shorts are in play here underneath your 430 for a push down in towards that pre-market low. So we'll keep an eye out on Tesla coming into market open here underneath your 430. As I mentioned, we can see now your 424 and that pre-market low 421. So that's what we have here on Tesla. As for NVIDIA, key level that we have marked out Friday's lows of last week, ultimately now gapping down right into a key level of support, which is our 181. So coming to market open here today, right at our key level support here, kind of bouncing in the pre-market. NVIDIA is going to be a little bit of a tougher short in my opinion, unless we're now underneath our 181. So shorts are in play here underneath that 181. Besides that, I'll be a little bit more cautious on this pop and fade. You could be looking to pop and fade down in towards your 181, but we're kind of shorting into a key level support. So I'd much rather wait for that break underneath your 181 for that continuation towards the downside. Longs on NVIDIA, you could be looking for the bounce play, reclaim back above your 181, or now it's going to be above your pre-market high for this continuation higher. So 2 long scenarios along with 2 short scenarios here on NVIDIA. I am leaning a little bit more towards the downside. SMH pulling back a little bit. We are bouncing in key levels of support. So if anything is going to head lower, at least on the semi side, it is going to be NVIDIA, since this one has been staying heavy compared to something like AMD, TSM, MU, right? NVIDIA has been staying a little bit more heavy. Let's go on to AMD. So AMD, last week we had a bunch of news. Bullish news catalyst pushing this back towards the upside. A little bit of a gap here on the daily chart. So now for AMD, let's see if we can flip back bullish. We kind of formed this like W-shaped recovery here now. So AMD, if anything is going to move higher, we'd like to see AMD buyers step in just based off of last week's price action. But key levels coming to today here for AMD. 223, and now we also have your 228. So let's keep this in mind here for AMD, basically your previous day lows along with your pre-market lows. So if you do want to see some upside here, we're going to be looking for longs above our pre-market highs and the reclaim back above your previous day lows, 229 here. Another possible scenario, bounce play off our pre-market lows for this continuation back up in towards that 230. So this is what we have on AMD coming into today. As for a few other scenarios that we have, AMD is not something I'm that interested in shorts, but potential pop and fade is in play. But that's going to be off that previous day lows. As I mentioned, I'm not that interested on AMD just based off of last week's price action. So keep an eye out on your previous day lows here on AMD. As for Apple, this one, let's look at this on the daily chart. So we've been talking about Apple here for a while. Really been showing relative weakness, breaking underneath key levels of support, 266, now breaking underneath kind of this bear flag that we have going on. Next key level here, daily gap on the higher time frames, plus it's going to be all the way back down in towards that 244. So for Apple, basically been beaten down this year just with a bunch of negative news catalysts. Now it's staying heavy underneath that 255 here as well. So key levels for Apple coming into today. Previous day lows. Now what we're going to have marked out is going to be that pre-market low, our 251, and we can kind of mark out this consolidation that we have in the pre-market as well. So previous day lows, and now we can mark out our pre-market lows. So for Apple, we could be looking for a couple things coming to market open. Number one, short underneath your pre-market low for continuation towards the downside. That is the first scenario that we have marked out. Another scenario, you could be looking for kind of this pop and fade either off your pre-market highs or maybe above this consolidation period. You could be looking for shorts right off the bat, or now shorts once it breaks back underneath that 252 for that continuation lower. So these are the scenarios that I have for Apple. Apple longs are going to be very difficult now unless we can kind of reclaim back above the 255 here on the higher time frame. So for Apple, keep in mind that 251. Google, a little bit of a pullback here as well. Key levels that we have marked out on Google is really this previous all-time highs. So I would like to see the buyer step in here. This is your previous all-time highs, 325, multiple touches. Now we're actually breaking underneath your 325. We're going to need to see the reclaim back above if you want to see any sort of continuation higher. If we reject this level moving forward, potential kind of higher time frame, head and shoulders is in play. So 325 is going to be key. Let's go back into the 15-minute time frame. You can see pretty big gap down here on Google. Now the key levels that we have marked out is going to be this 322. So at least moving forward, 322 is going to be key. If we do want to see some upside, we're going to need to see the reclaim back above for continuation higher. If sellers step in off this 322 right off the bat, we could be looking for a push down in towards that pre-market lows, 317. So this is what we have for Google. Let's go over a couple more names. As for Meta, nice little gap down here as well. Next higher time frame key level 580. But for Meta, a lot of these names, as you can see, pushing towards the downside. So with a lot of these names gapping down, coming to market open, what's going to be key here is the SPY and Qs right off the bat. A lot of these tech names have been a lot weaker. So something like the QQQ, this is something to keep in mind here. So the QQQ has been a lot weaker than the SPY chart, right? The Qs did even make a brand new all-time highs to start off this year. Whereas the SPY, brand new all-time highs, SMH, brand new all-time highs, IWM, brand new all-time highs. QQQ is really the only major indice that has not hit your all-time highs. So on this major pullback here with SPY rejecting off all-time highs, with QQQ breaking underneath a key level support, a lot of these tech names are going to show a lot more weakness. Like something like Apple. This one has already been pushing lower. So Apple, right, you can expect continuation lower. Google, right, Meta. If you're looking to buy some names for potential mean reversion, I would be very cautious specifically on some of these tech names unless it's like farther out or you're looking for like a position trade longer term, right? At least short term, these ones like Netflix or even like Microsoft, these ones are going to be hard to try and find a bounce. But for some of these tech names, for some of these tech names, it's going to be a little bit harder to find a bottom. So I'd just be a lot more cautious on a couple of these tech names here and much rather look longs on a bunch of these semiconductors that are still holding up. So for something like Meta, right, big gap down, you can expect it to just continue lower. Next higher time frame key level, as I mentioned, is going to be that 580. Amazon, another one where now we're kind of spilling back towards the downside underneath key levels here. What we have is really all the way back down and towards that 225. But for Amazon, key levels are just now going to mark out that pre-market lows, which is that 231. If you want to see some downside now underneath that pre-market lows for continuation or some sort of potential pop and fade. And then Microsoft, this one continuing to show some weakness towards the downside. Higher time frame key level here is your 456. If you go into the daily chart, another one. Right? Nice kind of rejection off the top. Now we're getting underneath key levels. Really for Microsoft, the next higher time frame key level is this pretty big daily gap. So for Microsoft moving forward, as long as you maintain underneath key levels, there is a potential that we gravitate down towards 440 and maybe this daily gap here on the higher time frames, which is your 420. But at least for Microsoft today, keep in mind this 456. Couple touches here in the pre-market, pop and fade off this level for a continuation towards the downside, or now underneath your pre-market lows, 451. And then Netflix, this one, we do have earnings today. So Netflix beaten down quite heavily here. We do have some earnings in the after hours. So we'll kind of talk about this a little bit more tomorrow to kind of kick off this earnings season. But this is what we have on Netflix. Key level is going to be that 88 along with our 8980s. Okay, so that's it for the Meg 7 names. Let me just quickly go over my game plan on some of these semiconductors along with some of these tech names here. So for the SPY and Qs, currently we are rejecting, as I mentioned, off that key support turn resistance level. So we'll keep that in mind coming to market open. Key level, as I mentioned, 610.50 for the SPY. Now what we have is your low that we created, plus we have your 683. So it does seem like we're dropping here kind of right off the bat on the SPY and Qs. As for my main watches coming to today, I'm going to keep an eye out on Tesla. Tesla underneath 430 for potential continuation lower. I'm also going to keep an eye out on NVIDIA, reaction that we have off your 181. And then even AMD, I'm actually a little bit more bullish on AMD, so I'm not as interested in shorts, but if we can show some strength, we will keep an eye out on AMD above your 229. As for everything else, Apple is showing weakness. We all have Meta showing weakness. Microsoft showing a little bit more weakness. So a lot of names showing a lot of weakness here. So we'll keep an eye out on the SPY and Qs in specific underneath that 61050. And then there's a bunch of names we could be looking for continued weakness like Apple, right? Amazon, Microsoft, Nvidia potentially underneath that 181, and even Tesla underneath that 430. So that's what we have on some of these makes. 7 names, basically anything now that you look at either on the SPY and Qs, right? You can trade the major indices during these times just because there's going to be a lot of volatility. So any name that you do trade now, there's going to be a decent amount of volatility just because of the news that we had over the weekend. VIX is spiking. So when you're talking about top watches, usually we're looking for like higher time frame breakouts. In this case now, the higher time frames were gapping down. So we can be looking for any names to trade primarily to both sides, specifically right on the SPY and Qs, and then most of these other names here as well. Okay, now let's go on to some high beta names here. It is already 8:40, but quickly go over these ones just because there's a couple names I still like here on the higher time frames. But let's quickly speed run through these before I get ready for market open. So Palantir dropping, like most of these other tickers here as well. Key level here for Palantir is going to be that 168, a break underneath here on the higher time frames. We can see some continuation lower. But for Palantir, nice kind of push down on Friday, kind of this break and retest. Now we're at a key level support. So bounce play above your 167. Rejections, we can see continuation lower. Let's go on to right SoFi break underneath key levels. Hood's already, it's getting reconnected here. Hopefully we should be back up. Okay, we should be good here. Yeah, as I mentioned, Hood break underneath. Let's go into MU. So MU is the ticker that you can see MU still holding up, right? MU and some of these semiconductors are really the only tickers that are holding up here in the markets. As you can see, higher time frame, right? You had this kind of wedge pattern break towards the upside, bullish news catalyst here on MU. Nice push up here on Friday, maintaining above your 352. If you want to long anything, MU has been fairly solid, right? Buyers, you can be looking for the bounce. Sorry, you can be looking for the break above your previous day highs for continuation above your 366. Another possible play here, bounce off your pre-market lows, 352 for continuation is in play here for MU. As for TSM, key level here is going to be that 342. Going to need to reclaim back above that for continuation higher. Potential kind of short for this gap fills in play, back down towards your 334. So key level here, 342 on TSM. As for Intel, we do have earnings this week, so be a little bit more cautious on Intel, but higher time frames, we do need to see that reclaim back above your 4750 for continuation higher. So that's what we have for Intel coming into market open here. As for a few other tickers, let's just quickly go over some other names. Costco actually looks really good since it's still holding up. SNDK, another ticker, really solid push towards the upside. Key level that we have now on SNDK is going to be this 395, maintain above 395. See this continuation higher, break back underneath. You can see a potential mean reversion. So coming into market open here, semis are still holding up, right? Intel still holding up, MU, TSM. These are the ones that are still holding up. Even SanDisk is holding up fairly nicely compared to the overall markets. So if we do want to long anything or play a bounce, keep an eye out on the semiconductors, of course, on that side. And then for the rest of the tickers, as I mentioned, be open and playing both sides. So game plan coming to market open. Right, keep an eye out on your 610 here for the QQQ. I'm going to be keeping an eye out on the futures chart since it's a little bit more cleaner. 25,280 is going to be my key level, as I mentioned, right? If we reject off this level, we can see this continuation towards your pre-market lows and below. A reclaim back above this level, we can see a mean reversion. So this is going to be the key line in the sand. You can already see we have a little bit of a reaction coming to market open. So keep that in mind. As for the ES, this is the key level here, which is our 6870. If buyers can step in above, we can see a mean reversion, break back underneath. We can see a push back down in towards that pre-market lows. So coming into market open here, as I mentioned, the VIX is spiking. There's going to be a lot of volatility. So expect that really into the end of month here with the Trump tariffs, with a bunch of news events that we have here as well. So at least right off the bat, we'll keep an eye out on the key levels. Most likely you just want to be a little bit more patient, right? Just wait for that first kind of 5 to 15 minutes to play out, because there's going to be a lot of volatility right off the bat overnight with this huge gap down. So you want to be a little bit more cautious. As I mentioned, be open and playing both sides. That's what's key here. You do not want to have a bias whatsoever. The markets can flip very quickly on any name, right? Specifically the spine cues. So be a little bit more cautious here in the overall markets. If the markets drop right off the bat, let's say, for example, we have this opening drive play, do not chase shorts underneath your pre-market lows, right? You want to be a little bit more cautious, especially after this huge gap down. You want to be looking for a pop and fade. You definitely don't want to be chasing shorts. If it already pops and fades lower, do not chase shorts towards the downside, because there is a very good chance after this big push, or sorry, big gap lower, if we do drop right off the bat, there's going to be some sort of mean reversion. So you don't want to get caught up in that. You want to wait for, right, a potential pop and fade if you are going to look short coming into market open. Besides that, kind of already laid out some of the watches I'm keeping an eye out for. Tesla underneath 340, right? Nvidia 181s is going to be key. Apple is going to continue to show weakness, right? Google, Meta, even Amazon and Microsoft, these ones higher time frames are now flipping towards the downside. But that's what we have for today. There's a bunch of other things I didn't really get a chance to go over, since there's a lot of things to talk about over the weekend. But we'll take a look at some other tickers tomorrow, of course. But yeah, hopefully you guys did enjoy that. If you did, appreciate it if you guys drop a like and sub. If you guys haven't joined the daily watch list, that of course is in the description below. VIX is good for both calls and puts, or mainly puts. Good for both. It's just volatility. So volatility index is going to be good for both upside and the downside. Keep over MNQ. I already went over most of these tickers. You can go back on the live stream if I missed any names. Usually I go over most of them. You can see on the right hand side, this is my watch list. So I go in order towards the downside. So if you do see anything here, you can just rewind the stream. Let's see what else. Stop loss trigger, and the candle's nowhere near the stop loss. Usually it's just based off the underlying itself. But yeah, I think that was about it. So hopefully you guys did enjoy that. If you did, appreciate if you guys drop a like. As I mentioned, if you haven't joined the watch list, that is in the description below. And I will see you guys all tomorrow. All right. Take care, everyone. Have a great rest of the day. Peace.